Hi everyone, welcome back to my channel Ask Parul, where we deep dive into the world of professional growth, financial security, and personal development. I'm your host Parul, and I'm here to guide you on this journey to success. In today's episode, I will have my guest Josh Gilbert, who is a market analyst at eToro, which is world's leading social trading and multi-asset investment company. We will explore the world of finance and investments around financial tips, investment strategies, market trends, and a lots more. So, lots of knowledge and insights coming your way. So, grab a cup of coffee, sit back, and let's get started on this exciting podcast. Stay tuned. Hi, everyone. Welcome back to my channel, Ask Parul. So, we are with Josh Gilbert. We are in episode number 2 right now. Josh, as we all know, is a market analyst at eToro, which is the world's leading social investment network. And Josh has a huge range of experience. He's based in Australia and he has over 8 years of overall experience in the field of finance and investments. He's been with eToro for more than 4 years now. He began his career as an investment broker when he was just 18 years of age. And Josh has started business and finance at Truro and Penwith College in England. Beyond market analysis, Josh currently co-hosts the global eToro podcasts. The links to those podcasts is in my description link. He also specializes in global equities, crypto assets, and portfolio diversification. Hi, Josh. Welcome again.
Thanks for having me back, Rob. It's great to be here.
Thank you so much. So I will just give a quick recap for all my audience who haven't seen episode number 1. I would strongly suggest please go and watch episode number 1, where Josh has spoken at length about different kind of financial instruments. He's also given his tips and insights around financial bites, which will help investors in their journey, no matter if you're an active investor or a passive investor. We've also taken a look at different kind of investment strategies, and also we have given Josh has given a demonstration around eToro and some of its brilliant features like copying trade. We've also looked at eToro Academy and how eToro can help you. So I would strongly suggest go back and look at that episode, because this is episode number 2, where we are going to talk about the key market trends. We'll also look at how 2023 has been for financial and investment market, and we'll also discover some of the financial tips. So, Josh, I think we are almost towards the end of 2023. We're already in November. So, as per your analysis, like, how do you describe your 2023? How has been, can you give us a quick recap of the year 2023? How has it been as a year for the global financial markets? Which sectors or industries performed well? Any surprises? And which sectors didn't really perform that well? I think if you can just give us a quick highlights of the year 2023.
Sure. Yeah. I mean, it's been a mixed year across the globe for different assets, stocks. And again, that depends on what's been driving markets. And a lot of what's been driving markets this year is inflation and sort of central banks. The US markets have sort of really dominated the proceedings in terms of performance this year. That's been led by technology, and sort of maybe more importantly, has been led by what is the Magnificent Seven. So for those that don't know, that's Apple, Amazon, Alphabet, Meta, Microsoft, Nvidia, and Tesla. They have contributed to over 90% of the S&P 500 returns this year, which sits at the time of recording around about 18 to 19%. And those stocks have, between them, all 7 of them, and an equally weighted index, have gained more than 85% in sort of 2023. So big cap stocks are doing much of the heavy lifting, and that sort of performance from those names is sort of huge. Crypto has also been a quiet winner as well. We spoke about that a little bit in episode 1, but it sort of sprung back into the limelight recently. But it has been the best performing asset for much of the year. Bitcoin is up more than 120% year to date. And much of that good news is sort of coming from this sort of growing expectation that we will see a Bitcoin spot ETF accepted, which the reason that's, so looked at and why it's a catalyst is because it would allow for institutional funds to sort of flow into the assets. We're talking about obviously trillions of dollars there in the US in the things like pension funds, superannuations, etc. Maybe a market that has disappointed is sort of China. That has really disappointed. That's come from, what has been a weaker than expected economy. Stock market valuations have sort of plunged. We had a lot of optimism for a recovery at the start of the year, and that sort of didn't come to fruition as sort of many would have hoped. That put sort of local stocks on the sort of the back foot. And unfortunately, that has also meant that something like the ASX, the Australian market, has slightly underperformed as well against sort of global peers such as the US, given such a large exposure to China, but also we've had slightly more hawkish central banks. So the RBA have been slightly more aggressive with their hiking cycle this year than many, had expected. They sort of put their foot on the gas a little bit more to sort of bring down inflation, and that unfortunately has sort of pushed back the expectation for rate cuts, and also meant that sort of rate sensitive sectors haven't been performing as well, and they make up a big part of the index. So things like financials, real estate, and also materials, which again comes back to sort of China. So unfortunately, here in Asia, not been such a great year. US has really dominated performance this year.
Perfect. And how do you see next few years? Let's assume starting 2024, next 12 to 18 months, or even 24 months. How do you see the recovery on the cards? Are we on the path to recovery? Any likely trends, growing sectors that the audience and the viewers should prepare themselves in next few months from now? And how do they make the most of this market, especially the global market? Like you said, China hasn't been performing that well versus the US. So what are some of the key things that the audience should definitely watch out for, and some of the things that they should be cautious or should be wary in next few years? So how does the future looks like?
Yeah, so I think making sure you are invested and diversified over multiple geographies is sort of really important. So again, not just sort of having that home bias and investing in Australia, looking overseas to the US, exploring different options in sort of Europe, even in China, as well. Again, China is a market that we are watching very closely. It's a sort of a contrarian view at the moment. And what I mean by that is not a lot of people are interested in sort of Chinese stocks at the moment, given there has been a lot of weakness there, and a lot of the share prices are down quite significantly. But that could then be an opportunity for some investors that see valuations that are significantly lower. Investors could see there being some opportunity for buying stocks that are potentially undervalued. So China is one market that I would say to sort of keep an eye on, because they've rolled out a lot of stimulus measures. They've rolled out a lot of support for the economy, and that could really start to sort of bear fruit over the next sort of few months and sort of long into the future. And it's really important to remember as well that their economy is struggling, but the economy is still growing. They're the second largest economy in the world, and they're still seeing growth even in this period. So that's really important to remember. Australia locally, we are primed right now to probably see rates stay higher for longer than I think many expected. So I think maybe staying defensive as we head into year end is sort of really important. But when we're looking to the US, we've got a view that rate cuts are on the horizon as early as May. And that is good news for rate sensitive sectors such as real estate. But also tech should also continue to do really well from that. They should blossom from a lower interest rate environment. And for tech, it has a huge tailwind in AI and cloud. AI particularly is one of the biggest technology revolutions we've seen for decades. Has really driven some market performers this year, such as Nvidia, which has gained almost 250% in 2023. But importantly, spending around cloud and AI is continuing, and we believe will continue into sort of 2024. And companies are monetizing AI. Nvidia, is seeing earnings grow by 500% year over year. Revenues are doubling. And that comes as use cases for AI continue to sort of grow. Even some tech names like Microsoft and Palantir, they're sort of really showing investors that AI isn't just sort of a hype. It is actually, coming through and actually translating into, revenue growth and earnings growth at the same time. So that's definitely something to keep an eye on. Crypto as well, I mentioned it a few times, but it's something I think should stay on investors' radar. And I think it does have a position in a diversified sort of portfolio. We have what is called a Bitcoin halving happening in March and April. This is when the reward for Bitcoin mining is cut in half. It takes place every 4 years. And essentially, this is really important because it reduces the supply of Bitcoin. And this means that we will only ever see 21 million Bitcoin in sort of supply.
Wow.
And that's sort of really important. It comes back to the traditional sort of supply and demand element. If you have people that want to own this asset, but there isn't enough supply, then that often means that prices move higher. But the halving event has always been followed by a crypto bull market. So I think for investors, that can't be underestimated, and is one of the reasons why we're seeing a lot of positivity in crypto as this sort of year ends. So lots to sort of keep an eye on over, the next 12 to 18 months. There's going to be lots of interesting things happening on the macro side as well. So inflation, interest rates, that's going to be a key market driver that investors should sort of keep an eye on.
And I think eToro as a platform caters to multiple global markets, right? It's not just the US market, but I think also the Chinese market. And I'm not too sure if you have the European market as well, but I believe if you can give our viewers a bit of like, how can they track these different markets? And also, I think, you mentioned a great point around the academy as well, and your podcast. I know that you do these weekly podcasts wherein you talk a lot about these stuff. So just give us a little bit insights around a sneak peek in that area as well.
Yeah, so I think what's great about eToro is that we are a multi-asset platform with, hundreds of different assets. So whether it's stocks, ETFs, cryptos, commodities, but also stocks and ETFs in different regions of the world. So we do have European stocks, lots of different European markets, UK, Germany, Nordic regions, Italy. We have US markets, Hong Kong stocks, Australian stocks. We have, pretty much something for everyone in there. And that's a great way to be able to diversify the portfolio is through geographies, because every economy is different, and often every economy will sort of be at slightly different stages, which I kind of alluded to a little bit there. And for all of those sort of stocks, so every stock on the eToro platform, when you buy a non-leveraged position or ETF on eToro, you pay 0 commission. So that's on all stocks and ETFs across the world. So there's no spreads, no fees, no hidden charges. You own the underlying asset, and there's sort of 0 commission, which is, again, a big part of us, allowing people to invest, smaller amounts, getting started early, making the most of sort of compound interest. That's sort of really important. And for those that maybe don't know a huge amount about what's happening in the US or in Europe, as you say, we talk about it very frequently across Digest and Invest, which is eToro's podcast. We have lots of different podcast formats. So we talk about crypto, we talk about technical analysis, we've got fundamental analysis, but we also have what's called the Market Bites podcast. It's 3 topics every week, the hottest topics in financial markets that we believe that you need to know. And we just break down news stories. We take the news, we analyze it for you and tell you what it means for you as an investor, why you should care and why you should sort of be interested in that news. And we do that across all of, our content in the eToro Academy. We explain the importance of diversification across regions, understanding investing in different countries, and how investing in those countries can be affected, whether that's through, economies, inflation, interest rates, etc.
Perfect. And I think for all my viewers who are watching this, I've given some of the recent podcasts of Josh in my description link so that you can go and check those out. I have seen one of your recent ones. I think it was on Apple and Tesla, I believe. I really enjoyed those 2 podcasts. So just shifting some gears, Josh, I think you spoke about multiple things. You spoke about the tech, you also spoke about the inflation, etc. And I think that brings me to my next question, which is, I believe, very, very important in today's economic scenario, is that, all these growing and persistent issues around inflation, global recession. 2023 has been the year of recession. We have tech layoffs going on across, especially, stemming from the US. We have interest rate hikes. The housing prices have gone up. I think RBA recently just introduced another increase in rates as well. So how can people, because people are going through so much, right? They are already in that financial crunch. And I think it automatically makes people a lot more defensive, right, when it comes to investments and trying out these financial measures as well. So, how can people ensure financial security and they can create avenues for generating passive income for financial security? I believe that's going to be relevant for most of us.
Yeah, and it absolutely is. And I mean, we're obviously in a very difficult period at the moment. Households are, seeing their budget stretched, whether that's through, the increase in interest rates on mortgages, whether that is, the cost of living, inflation has affected prices of everything. So it is, I think more important than ever to invest and try to create financial security. We obviously have different economic cycles, and it's not very often that we see interest rates and inflation this high. It's not happened for decades. So, ultimately being able to invest, say now, for example, will allow you to sort of grow and see your investments flourish over time and compound, which by the time we maybe see inflation and back at the highs that we've seen recently, your portfolio or your investments hopefully will be able to sort of be outperforming, inflation each year, because compounding is sort of why we reiterate to investors that it's important to start investing as soon as you can and be consistent with your investments. As I say, even with small amounts, starting with as little as $10 as you can do on eToro, you're benefiting from constant interest over time and dividend growth, capital gains growth from that stock. As I say, I said, at the start of the episode about the performance of the top 7 stocks, the Magnificent Seven, 86% return year to date. And I think that is the importance of trying not to overcomplicate investments. Sometimes we can go and try and find, that piece of gold in the mine, but sometimes, the gold can often be right in front of you. Buy assets that you understand and that focusing on, the stocks that, as I say, you understand how they make their money. These are the biggest stocks, but they are the biggest stocks for a reason, because they deliver and it's the products we use. Most of us probably have an Apple product. Most of us have probably ordered off of Amazon at some point over time. Most of us probably have a Facebook account, so Meta. So I think that's really important. If you're everyday life can give you investment opportunities. I like to just use what's around me. So whenever I walk around in Sydney, there's always a queue outside the Apple store, and there's always a queue outside the Louis Vuitton store as well. So 2 stocks there that have done very, very well over the last sort of few years with consistent returns. So I think it's really important to not overcomplicate in investments and like I say, compounding over the long term. The power of dividends as well. Dividends is really underestimated by most investors. We tend to not think about dividends until, retirement. We're not thinking about another income stream, but having dividends reinvested into an index, say, for example, for many years, can make a huge difference. The difference between the return of the S&P 500 and having dividends reinvested over a 20-year period is almost double. So that comes back to the point of compounding and reinvesting and keeping money in financial markets. It's sort of really important to sort of do that. So dividends and compounding, starting small on your journey. You can go to any sort of compound interest calculator. Just type it into Google, type in compound interest calculator. And if you put in, a few numbers, play around with the numbers, and you'll see the difference it can make by starting even just with a small amount, even with $10, $100, whatever you can, it makes a huge difference over the long term.
Yeah, I absolutely agree with you. I think, a lot of people think about this finance and investment sector as a short-term game. They are in for that quick money. Nothing is quick money, frankly speaking. I think in my personal experience as well, you need to be invested in the long term. And of course, I mean, you can have that short-term strategy as well. But the more you can stay invested in the long term, I think, as per me, obviously that's a better strategy rather than people who are just selling that millionaire dream. I'm not too sure if that really it's too good to be true in today's world. So I think when you spoke about the long-term wealth generation, and we spoke also about different instruments, we spoke about crypto, stocks, ETFs, we spoke about bitcoins, etc. So when looking at the long-term wealth generation, are there some specific instruments that are better suited for long-term wealth generation and some are more around the table? Like, for example, some people are more intraday trading as well, which I'm not too sure if it's the best suited for a long-term investor. So can you just break down these instruments and tell us that which are the ones which are best suited for long-term wealth generation?
Yeah, so I'd say for long term, you'd obviously look at stocks and ETFs. Could even put crypto in there as well as sort of longer term
Yeah.
assets. Shorter term assets usually come through the likes of sort of commodities, currencies. We have a little bit more volatility in those. Commodities will also go through lots of different economic cycles. So it was one of the best performance assets last year, but is not a good performing asset this year. Because oil has come under pressure, commodities just haven't been what investors have been sort of buying this year because stock markets have also done very well. But also, if you want to sort of have exposure to commodities, you can do that through an ETF long term. So that's why we would always sort of look at an ETF on sort of commodities. If you want to sort of buy gold and sort of keep it long term, you can do that through an ETF. You can also buy the asset as well. You can buy the physical gold on sort of eToro as a commodity. But commodity and foreign exchange, so currencies, they're often seen as products that investors or traders will use maybe short term. You can use things like technical analysis to go into that a little bit more, where we focus on sort of price movement charts, support levels, resistance, essentially history, how the asset has performed over time as well. Whereas with stocks and ETFs, we tend to look at the fundamentals a little bit closer. So if we're looking at buying Amazon, we want to work out how much money they're making and how many products they're selling and are they still growing. So there's lots of different research and analysis that can go into sort of different asset classes. But if you're looking long term, you sort of can't ever seem to sort of really go wrong with stocks and ETFs. Those are the assets that investors tend to sort of use for sort of long term investments.
Perfect. So I think one last question, because we're just coming close to our episode number 2. So there's so many brokerage firms out there. There's so many platforms. Obviously, eToro is one of them, which people can use for investing. And given it's such a competitive market, different brokerage firms, platforms, etc., have different types of fees associated. The user interface is different. The choices that they offer to the customers is very different. There is safety, regulation. There's so many things, right? So how can people, when they're choosing which platform to be in, what are some of the factors that they should take into consideration? And I think if you can also touch upon there's so many scams right now going around, investment scams and cryptos, etc. How can people really keep themselves safe around those aspects as well, so that they don't make the wrong choices in terms of which platform to use? Just give us a good quick analysis on that.
Yeah, so I think you touched on it there, but safety and regulation, they're the most important. This is your money.
Yeah.
You want to feel comfortable with sort of how you're investing. So finding a platform that is sort of regulated. So eToro is regulated by ASIC here in Australia and by other major regulators and authorities around the world, in the US, in the UK, across Europe.
Yeah.
So that's really important. Making sure that whoever you're deciding to invest with are regulated in that region that they should be, and by the local sort of regulator as well. So that's really important. And how can you avoid scams? Well, you sort of mentioned it earlier on, but if it's too good to be true, it often usually is. But also, reach out, speak to people. Before you do anything, ask a question. Verify it by someone. Reach out to, if it's something to do with investments or something to do with eToro, reach out to us. Reach out to whichever broker you use. For example, here we have customer service representatives here in Australia, but also across the world, and we're on hand to sort of help you out with questions about markets, regulation, safety, whatever that might be. You can help. So I think that often people can sort of keep it in, not say anything, but if you're not sure, just ask the question. I think that sort of really helps. For example, at eToro, we segregate client funds, so they're sort of completely separate. So that means that users' funds are always sort of protected. So that's really important. That's on the safety and regulation side. Then there's a couple of things you want to look at: costs to open a trade. I mentioned earlier that obviously all of the stocks and ETFs on eToro are sort of zero commission. How much is it going to cost you to sort of open a position? Does the platform have all the assets you're wanting to invest? Do they have stocks, ETFs, commodities, crypto? Does it have everything you need in one place? And then also it comes down to simplicity and ease of use as well. Can you use the platform easily? You want to feel comfortable when using it. As I said previously, we have a demo account where you can sort of try your hand, which allows you to get comfortable with the platform before getting started. And I think that's a massive win, because it allows people to, open and close trades, get comfortable with what they're doing. At the end of the day, this is your money. This is your capital that you are risking. So it's really, really important to feel comfortable with that. So take as much time as you need on the demo account. It's still something that I use even after being in financial markets for years, to try different strategies to see how assets move. So don't think that it's something that you can use once and then never use again. It's always there. If you use all the money, we can top the money up as well. So there's plenty that's available for you. So look, safety and regulation is really important. Ask those questions if you're not sure, and make sure you sort of feel at ease with the platform.
Perfect. I think this has been such an amazing episode. Thank you so much, George. I have learned so much in this 1 hour session, but I'm pretty sure all the viewers would have loved to listen to you. Thank you so, so much. And we'll definitely keep having these podcasts in the future as well. But I would really like to thank you for your time and valuable insights. Thank you so much.
No, thanks very much for having me, Parul. Take care.
Thank you.